up to you guys to do. If there's a lot of background noise, then I'll eventually just mute. In fact, I'm gonna, sorry 562, but I'm muting you. All right, there we go. Anyway, so we do these workshops every month. We usually do them in person, obviously, and with the pandemic, this is in person now. I'm happy to see all of you, first timers and long timers. It's great to have you all here. Every 4 years, as we get close to a presidential election, I've been in this role now for about 10 years at Cal State Fullerton. In 2012, we did this prior to the presidential election. 2016, we did it again. And so I reached out to Pat Soldano, who you're gonna, if you don't know her already, you're gonna get to know her very well here today, and you'll be really grateful that you did. Pat is the CEO of an organization called Family Enterprise USA, and she can tell you more about her role. And I'm just gonna introduce Pat and then have her introduce our panelists here momentarily. Pat represents you. Pat spends her time focused on representing you as a family business owner, as a leader, as a service provider and subject matter expert in the family business arena. And she does that in DC. She does it nationwide, but she spends a lot of time in Washington, D.C. So when I thought about, having a panel to talk about and prepare us for what we need to know for this election, obviously she was the first person I thought of. Keep in mind, the purpose of today is not to persuade you in any way. It's not to influence you in any way towards an initiative or away from one, towards a candidate or away from one. That's a decision that we all make individually. There are great reasons to vote for both candidates. There are bad reasons to vote for both candidates. There's great reasons for each initiative, and there's bad reasons for each initiative. The idea today is simply to educate us a little bit more so that when we mark the ballot, whether in person or however we do it, we are a little bit more educated on what we're voting for. Each of our votes, as you know, really does matter. And I know personally that I'm really looking forward to this today. There's a ton of content to cover today, so I'm going to shut up here in a second. Just a couple logistics. If you have a question during the presentation, one of two things. Type it into chat and say, here's my question, and I'll ask it at the appropriate time. We're not waiting till the end. We'll interject it, because if one of them's on Prop 23 and you have a question about Prop 23, we don't want to wait till the end. We want to ask it right then. Either type the question in the chat and I will ask it, or just say, Ed, I have a question, and then I will call on you. You can unmute, put your video up, and ask the question in person. That's entirely up to you. So without further ado, I'm going to turn the time over. So again, if you could all unmute except for Pat and me at this point. Pat will introduce our topic, introduce our panelists, and we'll go from here. Just great to see you all. We'll wrap right at 11. I have another meeting at 11, but I can be a little bit late for it. But for anybody that wants to stay on, I'll keep the Zoom open and open up my other meeting on my other computer here. So Pat, take it away.
Well, thanks, Ed. I really appreciate you putting this workshop on today, because I agree. I think it's a very, very important topic. And it's going to happen here before we know it. So preparing for the 2020 election. I'm going to go through some slides first to kind of set the stage for the discussion of our panel. I am very pleased to have with me today Russ Sullivan. He is a partner at Brownstein, Hyatt, Farber, and Schreck, and I've known Russ for probably 20 years. He's also was director of Senate Finance Committee, Chief Tax Counsel for Senator Bacchus, and he is just a very brilliant political strategist. Brandon Ramon with Squire Patton Boggs. Brandon and I are probably working together almost a decade now. Both of these are DC-based firms. Brandon has an incredible amount of energy, and he is the one that gets me so many of the meetings in Washington, D.C., which are much more difficult to get than you can imagine. And last but certainly not least, Curt Pringle, who's president of Curt Pringle and Associates. Many of you know that Curt Pringle was two-term mayor of the city of Anaheim, but probably more importantly, he was Speaker of the State Assembly. In that role as Speaker of the State Assembly, he was a Republican leader, Republican caucus chair, chairman of the Appropriations Committee, chairman of the Rules Committee, and vice chairman of the Budget Committee. So currently, as you can see, Curt is president of his firm, Curt Pringle and Associates, and they are a government and public relations firm, and I suggest that you look at his website if you want to learn more about his firm. We're going to start, again, I'm going to do some slides, but Russ will talk to us about the election process from a national level, the state, and both the presidential election. and he'll talk a little bit about Trump's tax policies. Then Brandon's going to talk to us about Vice President Biden's tax policies, and Curt Pringle is going to cover a lot of content, but it's going to be all of the California initiatives and some of the state elections that impact all of us. So let's get started right away with some of the results. Just a few of these slides from the survey. Many of you in the center participated in the survey. We appreciate that. I just want to remind you all what the top economic policies were for family businesses in 2020. Reducing the estate tax at the top of the list, but very close second is income taxes, and then reducing regulation. These are, every year we ask this question, and every year these three are at the top. They're kind of interchangeable year after year. What's interesting about this slide is trade policies is at the bottom. And legislators have to be reminded all the time, well, trade policies are important. They're not as important as what hits their bottom line, which is taxes, and the cost of regulation. In terms of tax policy, at the top of the list is income taxes. And this, the reason that this scored higher is in this question, they can only answer one question at number one at the top of the list.
Lola, are you with Mrs. Butcher?
A second is estate taxes and then capital gains. So what you're looking at is the top two boxes, and that's why it doesn't add up to 100%. I believe income tax is very important to family businesses because many of you operate as a pass-through organization. So an S Corp or an LLC or an LP, and you're still paying that 30 to 35% tax rate when corporate America is paying a 21% tax rate. So I think this is really relevant to our topic around the election. What you may not know is in the 2018 midterm election, more Gen Zers, millennials, and Gen Xers voted than a combination of boomers and silent generation. So what that means is the next gen, and now these Zers are 2 years older, really are going to be a force in this election. And this next slide shows that also. Millennials in 2014 to 2018 doubled the number of them that voted. And once again, they're older now. So again, the impact of the Z generation, the X generation, the millennials is going to be very significant in this election. These are a few slides from a poll that's done very often by Frank Luntz. This was done late last year. It is not a surprise to anybody, but the country is very divided. And the older you are, as you can see, if you're 65 and over, you really believe that the country is very divided. But even those Zers, those 18 to 29-year-olds, believe, 74% believe the country is very divided. But what you might be surprised to learn is what divides them is politics more than anything else. So if you look down this list, what is the biggest divide? The answer by the voters was Republican versus Democrats. Second is government versus the people. Third, rich versus the poor. Fourth, elites for every day. And fifth on the list, people of color versus whites, which you might have thought would be at the top of the list. Talking about the next generation, what's going to be so significant in this election, you should know that the Z generation, the millennials, they really believe that corporations, American corporations, should be committed to serving the world. Whereas the booming generation, the older generation, they believe that corporate America should be committed to serving America. What is interesting about the divide in this country is even as divided as we are, the one thing we can agree on is business is still better than government. And this slide may shock you. When the question was asked, which has a more positive impact on people like you, 66% of voters, including 58% of Democrats, say business has a more positive impact on me. And when asked who works harder for hardworking taxpayers, 77% of voters said business over government. And look at that Democrat vote. 65% of Democrats believe business owners work harder for hardworking taxpayers than government. So now I'm going to turn it over to Russ Sullivan. And Russ, if you could, I'll stop sharing. If you could share your slides.
Thank you, Pat. We'll give a time for you at a later date to go into a lot more detail on those survey results. So we'll set something up soon.
Okay, thank you, Ed.
Good morning. Russ Sullivan here from Washington's. Honored to be with you. Let's talk a little bit about the election, some of the things that you know, and some of the things. Can you help me, Nancy? I'll go. There we go. Some of the things you've been reading about, other things you may not have. So here we go. Let's talk about the presidential election first. You've seen the polls. These are from late September. Where Biden is leading the national polls and the popular vote. His lead is now expanded another 3 or 4 points in most polls after the debate and his battle with COVID-19. But again, I don't think it's too much of a risk to say former President Biden is going to win the popular vote. The question is, though, will he win the Electoral College? And so I'd like to camp here for a couple of minutes. For those of you who think, oh, Biden's ahead by 8 points, he's going to win. Well, not necessarily the case. So if you'll take a look at this, you'll see that certainly looking back to 2016 and what happened there versus where Biden is today, he certainly locked up more states than Trump has. 212 electoral votes to 125. California, of course, is in that 212 solid for Biden. But if you look at the individual states, you can see that Trump could win this election and lose the popular vote by several percentage points. So let's assume Texas actually goes to Trump. Then if you look at the toss-up states, each of those Trump won in 2016. And if you look at today's polls, he's even in all of those states. So just a few points or maybe 1 or 2 more points up, he wins all those states. And then he is only just a few electoral votes. He's about 22 electoral votes away from winning. So he would just have to pick up 2 of these states that are in the lean Democratic category. Again, the ones he won last time were, the ones he won last time were Michigan, Wisconsin, Arizona, and Pennsylvania. He really just has to win 2 of those. Biden, on the other hand, has to do much better. He's got to win virtually all of these lean Democratic states. He can lose 1 of them. He could and still get to 270. But I do think that we're going to have a close election. Remember that Trump normally polls worse than he actually performs, and certainly he's had a run of bad luck. He'll probably have some sort of comeback where he gains some momentum sometime between now and the election. So, of course, as you have read too, if we do have a close election, then it may not be decided on November 3rd because so many states are now encouraging mail-in balloting, early voting, those kind of things, and every state has different rules. Some are going to count those ballots in advance of November 3rd and just announce them. Others are not going to start counting till the day after. Some are even going to allow mail-in ballots that arrive after November 3rd to count. So we'll see. However, in most of these swing states, Biden is slightly ahead. Keep in mind the president is facing an uphill battle. It's difficult for an incumbent to win if they've had a recession during their term, particularly the last 2 years. All right, so let's go to the Senate then. And here is the key part of the Senate. The Senate is 53-47 favored by the Republicans right now. It is most people viewing all the races that are up for election think the Democrats are likely to gain some seats. But the question is, will they gain 3 or more? So the most likely incumbent to lose or seat to switch is actually Doug Jones in Alabama. He's a Democrat, but probably going to lose to Tommy Tuberville, the former Auburn coach. That'll be a pickup for Republicans. The next few vulnerable are Republican seats, who Republican is running for re-election. Number 2, in Colorado, Cory Gardner is running behind John Hickenlooper, the former governor. In Arizona, Martha McSally is running behind Mark Kelly. And in Maine, Susan Collins is running behind her opponent as well. In North Carolina, the race was very close. Cal Cunningham was ahead of Mel Tillis, but he's had a little scandal lately and more people think maybe that one has moved down on the list. There's another Democrat in trouble, Gary Peters in Michigan. Trump may very well pull him across the line, but he is running near to or close behind his Republican challenger, I believe, Mr. Jay. So one final point here is look at number 8. In Georgia, we have 2 races. One is the incumbent running for re-election, David Perdue. He's in a fairly close race, but Kelly Loeffler is filling out a term and is running in basically a primary, jungle primary. There are 20 candidates. You have to get 50% in Georgia. Odds are that seat is not going to be resolved on election night, and there'll be a runoff January 5th. So it's very possible we won't know who controls the Senate till January of 2021. In the House, note one key trend, that people are not splitting their ticket as much as they used to. Back in the 80s, as many as 40% of Americans would vote for the president of one party and their congressman for the other party. That's down to single digits in recent elections. We expect that to continue. The Democrats have more candidates in trouble, but they have 20-seat majority. So even though they will lose some seats, there'll be some upsets on the Republican side. Most people expect the Democrats to control the House. But if Trump actually wins the election, those bets are off, and we could very well have a Republican majority across the board. All right, that's all we have on the election, and I will switch now to talk about what happens if Republicans win. All right, now I've already made the case that we are not going to know till election night. So let's talk about what actually will happen if Republicans take charge. So this scenario will require Trump to win, the Senate stay status quo, and the Republicans to take control of the House. If they do that, initially they're going to work on rebuilding the economy. The Congress has been stymied on doing another bill related to COVID-19, another round of PPP loans for small businesses, all those kind of things. After the election and once the new Congress takes office, it's likely that something will pass fairly quickly regardless of who's in control. These are the items Republicans are focusing on. But longer term, Republicans will focus on health care, particularly if the Supreme Court overrules and finds the ACA unconstitutional. But really their top priorities from an economic standpoint would be in the areas of corporate and individual tax. So let me hit some of the corporate tax issues. In the corporate area, there are a number of provisions from TCJA that will expire during this next presidential term. You see the deadlines here of the specific provisions. We're also looking at the end of 2025 of all the individual provisions, including Section 199A, the deduction for pass-through entities, will expire at the end of 2025 as well. However, Republicans are pushing for a few other changes. Some want to reduce the corporate rate further to 15%. President Trump has talked more about Made in America tax credits, trying to either provide 100% expensing for certain businesses that bring manufacturing back to the U.S., or particularly tax credit for companies that move operations from China. Specifically, he's talked about lowering the rate, particularly for companies who relocate their operations. Several options of how to achieve that objective. He also will not be scared to continue using tariffs and has threatened to do that for companies that don't bring jobs back to the U.S. where he thinks they should. There are some other corporate proposals, mostly by congressional Republicans, trying to expand the R&D tax credit, as well as really encourage innovation, the kind some of us were talking about prior to the event starting, of let's be innovators, help people with startup costs, further expand those in particular industries that we want to be based here in the U.S. And then on the individual side, we've talked about the top rate. Trump would just like to make those permanent if he can. However, he's more than likely to be able to extend those for a number of years, But to make them permanent, he's going to have some Democratic support, or he's going to have to use a reconciliation, a procedural process where they get to pass one tax bill with just 51 votes. The estate tax, as you know, the exemption amount was changed. That will expire at the end of 2025. And we've already talked about Section 199A. The other big area, final big area I would talk about is capital gains, where President Trump has really talked about wanting to reduce the capital gains rate or to index assets for inflation, which would result in a significant tax reduction for those particularly who've held assets for a number of years, like many family businesses have. We'll see how he plans to do that. He's talked about legislation and he's talked about regulation. So there you have a brief overview of what happens if Republicans wins.
Thank you very much, Russ. Appreciate that.
Oh, Russ, before we move on to Brandon, can you answer a question as to what are those early states in the Senate that are going to be coming in that everyone should pay attention to? Because some of those are those toss-up states.
Yeah, so it is basically the ones on the East Coast, particularly in the Mid-Atlantic, southern states, North Carolina, South Carolina, and Georgia. Those are all bellwethers of what may happen nationally. The first two states that report in are Kentucky and Indiana, and those are not bellwether states. But the next hour we'll get somewhat of a feel of what's happening, and then north side, Pennsylvania, but we're pretty sure Pennsylvania is not going to call their race early. It's going to be a long night there.
Great, thank you. So Brendan, can you share your slides now and talk to us about Vice President Biden's tax proposal? It's pretty extensive, so.
Yeah, happy to do it. And glad to be with everybody today. Brandon Roman at Squire Patton Boggs. I'm going to walk you all through some of these slides. Let's see, Pat, can you see the screen?
Yes, you just need a slideshow from the beginning.
Yeah, I'm trying, but it seems to be freezing. Let's try that again. Well, I may end up just having to do it in this view because the slideshow from the beginning seems to be having an issue with technology over here. So I apologize. Can you see? You can see my slides at least from here.
Yes.
Brandon, try that little screen down towards the bottom right. That's where it slides the percentage. You know, that little, there's like a little movie screen looking thing just left of that. There's a little screen. If you click on that, that might open it up.
Perfect.
Or even just a little left of your arrow there. There's that little screen that you click on. That's where I usually go when I want to maximize the.
Yeah, I'm trying. Yeah, it's making it a little bit bigger, but it may have to. Okay.
No problem.
Again, apologies for the technical difficulties here,
And
everybody.
we'll send these slides out to everyone too after.
Yeah.
So, yeah, it's more about what you have to say than the slides anyway. Thanks.
Okay. Yeah, no problem. So again, Brandon Roman at Squire Patton Boggs, and I'm glad to be with everybody today. I'm going to talk a little bit about Vice President Biden's tax policy platform, which no surprise is quite different than President Trump's. So first I'll talk about the individual tax policies and then switch into some of the corporate policies that you should be aware of, and then go into a few of the other economic development issues that are on the table with the Biden administration. So first, and this is a theme that you'll see throughout the presentation today, but unlike President Trump, Vice President Biden largely would like to repeal many aspects of the Tax Cuts and Jobs Act, or the tax reform law of 2017. So he would first, with regard to individual tax rates, he would increase the top tax rate to pre-TCJA levels of 39.6, but also has called for reducing income tax on middle and low income taxpayers. And then there's also specific tax policy incentives for low and middle income Americans. Some of those include an expanded child tax credit of up to $8,000 per child, or $16,000 per family, and that would be refundable. Forgiveness of student loan debt that would not be included as part of taxable income. Expanded workforce opportunity tax credit, and that would be inclusive of military spouses. Providing tax incentives for 401k plans and other retirement savings vehicles, and then also providing tax credits for companies to actually offer those types of retirement savings plans for their employees. Again, unlike President Trump, the Vice President Biden would actually call for an increase of the long-term capital gains rate of 20%, almost doubling it to 39.6 to be tied to the top level of individual income taxes. And then also would eliminate the stepped up basis for capital gains at death. With regard to itemized deductions, there were some changes made in tax reform, and the Vice President would cap the tax benefit of itemized deductions at 28%. And so that means basically anyone with a taxable income bracket of over 28% would effectively face limitations on their itemized deductions. He would also reimpose the PEAS limitation, which is basically a reduction in value of itemized deductions by 3 cents over a certain value. And for purposes of that, it would be deductions over for income over $400,000. In terms of pass-throughs, Russ mentioned the Section 199A deduction. There was a 20% deduction incorporated for pass-through entities to offer some parity for these types of businesses as compared to the corporate tax rate reduction in tax reform. The Vice President's proposal would gradually phase that out over the next several years. We could also eliminate the carried interest loophole, dealing with the treatment of taxation of the income earned from these hedge fund managers. And then Russ also referenced the payroll tax. Unlike the President's calls for reducing the payroll tax and deferring these payments, given the connection with the payroll tax as a source of funding for Social Security, he would leave that in place. But then also it would suggest subjecting income over $400,000 to that 12.4% payroll tax, which would leave a gap, because the current cap on that is $137,700. So there'd be a gap of income that would not be taxed, but then the over 400,000 would then begin to be taxed again. And that would be again in an effort to help shore up the Social Security program.
So Brandon, this is Russ. So is 400,000 kind of Biden's cutoff point when you actually look at the specific proposals of TCJA, like even the 199 cap A deduction? He'd say people below that get to keep it, but above that, we're going to get rid of it.
Yeah, I think that's right. You hear a lot of talking points, and the $400,000 seems to generally be that threshold. So the final two pieces deals with the estate tax and wealth tax. And so as we all know, in tax reform, there were efforts to fully repeal the estate tax and couldn't quite get there. So there was a doubling of the exemption. So currently, I believe it's 11.4 million per individual and 22.8 for a family or for a couple. And this is Russ mentioned in terms of the temporary nature of these individual tax policies expiring in 2025. To the extent no action is taken now, the exemption would be reduced, but the Vice President would, including among his policies, more immediately remove and reduce that exemption increase. And then finally, the last piece I'll talk about is the wealth tax. Just something to keep an eye on. The Vice President has not called for tax policies that would impose the so-called wealth taxes that Senator Sanders and Warren had proposed, but you'll likely start to see a continued trend in that direction in terms of calls for imposing wealth tax on the uber wealthy. And so again, don't necessarily anticipate we'll see something coming out of the Biden administration, but I think that we'll see growing calls for that within the Democratic caucus as time goes on.
So thanks, Brandon. I'm gonna, are you done? Are you?
No, I've got, there's a couple more slides I can go through.
You've got another slide.
Yeah, I've got a couple
Okay.
more. Yeah, I've got a couple more slides I can go through, and then I will wrap up. But just quickly to go through the corporate tax policies. Again, I mentioned the repeal of the TCJA, and that would raise the corporate rate from the current top level of 21% to 28%. But I'll also note, and I'll talk about this a little bit more in depth at the very end when I'm looking ahead at what's actually feasible. Senator Harris has called for fully repealing TCJA and imposing a corporate tax rate at the top rate of 35%. So again, obviously it's a Biden administration, but as you go forward, depending upon how much of a gap there may be within the Senate, the margins in the Senate, there may be a more call for progressive tax policies that could potentially raise the rates that Biden had proposed. But again, something to keep an eye on. There would be a minimum corporate tax with book profits over $100 million. And so they would have to either pay the greater of their income tax that would be subject to the traditional corporate tax, or 15% minimum tax. that would exclude net operating losses and foreign tax credits. And then in terms of the tax on your kind of intangible global income that may not normally be taxed otherwise, which is something that was imposed, it's called GILTI as part of tax reform. They've called for doubling that rate of 10.5% to 21%. And then in terms of a few additional miscellaneous tax policies, there's also discussions in the Biden administration for manufacturing community tax credit to reduce liability of those communities that are experiencing work layoffs or government shutdowns, expanding and making permanent the new market tax credit, and then also looking at various renewable energy tax credits and deductions and ending those subsidies for fossil fuels. So then I know that just to kind of move on, since I know we have still more to talk about, and Pat, it sounds like you have a question, and Russ would appreciate your thoughts on this as well, but looking into the 117th Congress in terms of what actually to expect in tax policy, to the extent that the Democrats are able to take the Senate and the House, maintain the House, and then take the White House, I think we're going to be looking at potential for tax policy changes, but I'd say the extent to which they actually are able to be implemented will largely be determined by the margins of the Senate, because to the extent that it's narrow, you'll have people like Joe Manchin and Kyrsten Sinema, who are fairly moderate Democrats, making those deciding votes. But to the extent there's a larger gap, I think you have a little bit more flexibility within the caucus to take a little bit more of a progressive approach. And again, I think one example of this could be seen in the corporate tax rate, with Biden favoring the 28% rate and Senator Harris favoring the 35%. So the extent to which there is an increase in the corporate tax rate, the amount of that increase could potentially be dictated by the gap in the margins in the Senate. And the final thing I'll mention also again is in terms of actually getting something done. We've talked about the process for using budget reconciliation, and now that is always one option that they have in the Senate, which is basically a procedure that allows you to pass legislation, as they did with tax reform, under certain budgetary constraints, certain policy constraints, with a simple majority vote in the Senate, which is usually not possible. The other option is potentially changing the Senate rules to eliminate the filibuster and allow them to again move forward on legislation with a majority vote. I know that there's differing opinions on whether to do that or not. I know some of Biden's top advisors has called for eliminating the filibuster, and again, that will largely depend upon the margins in the Senate and whether the Democrats are able to take control. But something to consider, because to the extent they are able to change those rules, I think there is an increased likelihood that you do see some an opportunity for at least moderate to significant tax policy changes, especially on the corporate front next Congress. But Russ, would welcome your opinion, and then Pat, I know it sounded like you had a question.
Just a couple of points. You're going to hear a lot in the next few weeks about some of these rules issues. The biggest one you'll hear will be about court packing and whether Democrats are going to add to the Supreme Court beyond the 9 current members. Don't believe it. It's not going to happen. A lot of Senate Democrats don't want to do that, but we'll see the debate play out. Second is this issue of changing the rules so you can pass a bill with 51%. Again, I don't think that's going to happen, at least early in the term. For your reference, California Senator Dianne Feinstein has expressed some reluctance to changing the rules in that regard. And so if she's opposed to it, then there's going to be a significant number of Democrats opposed, and they won't be able to do that. However, I will say one thing that's common among both candidates, and is the most likely thing on the business side, is some incentives for domestic research and manufacturing, particularly if you have operations overseas and you move them back home. I think the federal government's going to start subsidizing those significantly.
So Russ and Brandon, my question is really to both of you around wealth tax, because while Brandon mentioned that Vice President Biden doesn't have a specific wealth tax, we've heard a lot of conversation from a lot of candidates. And Russ, as you well know, Senator Wyden, I believe, who would be chair of the Senate Finance Committee if the Democrats take over the Senate, which is where all tax policy lies, he has proposed a very aggressive wealth tax. Wealth tax is very scary to family businesses because it means that they're going to be paying a tax on the illiquid value of their business probably every year. And the business will have to be valued every year to pay that tax. So can you talk to the likelihood of a wealth tax being, assuming that the Democrats do take over the Senate, that a wealth tax would really happen?
Sadly, Pat, this issue is live. The media is not reporting about it, because they're focusing on what Biden and Kamala Harris are saying. But Biden doesn't have a wealth tax proposal. That void has been stepped into with Ron Wyden with his proposal. He calls it tax wealth like wages, basically saying I have an anti-deferral proposal that you should have to pay a tax on the appreciation in your assets every year. If they're tradable, you pay it every year. If they're not tradable and they are illiquid, you may not have to pay until you sell the asset or transfer it. But at that point, you not only pay your gain, you also pay an interest factor for the fact that you did not pay on the appreciation year by year. And therefore, economically, it will be designed to tax you as if you did pay capital gains tax on the appreciation each and every year. That is dramatic change. And I will tell you that Democrat leadership in the House and the Senate believe it's the most viable proposal to address income inequality. That's Senator Schumer and Speaker Pelosi. And I think that it will get a very strong hearing should Democrats sweep this election.
Yeah, and I'll add with what Russ said. I think that's right. As it mentioned in terms of especially the whether the Democrats really have a mandate coming out of this election in particular, they'll go forward and try to publicize and make these policies more in the public eye, because as Russ mentioned is a good point, the media is focusing largely on Biden and his proposals, not necessarily nationally on this proposal by Senator Wyden, who's obviously most influential Senate Democrat on the tax writing committee. In terms of the likelihood, I would say, again, given that that's largely going to depend upon the makeup of the Senate, and we obviously have the folks like I mentioned, Kyrsten Sinema and Joe Manchin, who I'm not sure would be on board with this, but I think it's also something that people should be concerned about, because this is really the beginning of the train that's taken off at the station. It's it'll be an opportunity to get this highlighted and be out there in terms of receiving public criticism and review, but I think it's definitely heading that way in the caucus long term.
All right, thank you. I want to make sure that Curt Pringle has enough time. So why don't you share your slides, Curt? And Curt's going to talk to us about something near and dear to all of our hearts here locally, and that is the California initiatives. He's got a lot of initiatives to cover, and the California elections, and what's important to us here in the state of California.
Well, thank you, Pat. Thank you, Ed. Nice to be able to talk to some of you familiar faces. I have spoken to the group at least once or twice. And I'm going to talk about the most exciting issue of all, and that is how screwed up California could be if certain initiatives get passed. But in a year like this, there are a dozen initiatives on the ballot, and all of you guys have to forgive me, because after I left the legislature and I set up my business, I also taught for 10 years as an adjunct faculty at UCI on California government. And I really think this is one of those places where everybody always needs to be refreshed. So there are 12 initiatives on the ballot. The legislature about 6 years ago passed a law that says June ballots cannot have citizen-sponsored initiatives. So if you collect signatures and you get it on the ballot, it can only go on a November election. It can't go on a primary election. Only the legislature can put up initiatives on the primary election. So that means in November, you'll have a lot more, whoops, looks like I misspelled election, so I better move on. So first off, let's talk about what's on your ballot. They're propositions. And in California, there are two types of propositions. And there's a theme here. There's two types of propositions. One is an initiative, and that's basically establishing a law or changing the Constitution, and the other is a referendum, which is challenging a law that the legislature passed. So on this ballot, we do have almost all initiatives, and they come in two types. They come statutory or constitutional changes. So both of those will be evident in this ballot. And there's two ways to get initiatives on the ballot. Either by legislative action, the legislature passes a constitutional amendment with 2/3 of the members of both the Assembly and the Senate, and then that goes before the voters, or the public collects signatures, and that's about 15% of the people who voted in the last general election. So in California, that's daunting. Or you can have a referendum, and we'll talk about those. And that's basically saying, hey, we want to overturn what the legislature did. And those are really tricky. There's one of those on the ballot, the very last one on the ballot that I'll talk about if I have enough time. And basically, you'll be voting as if you were a legislator. So you vote yes if you want the measure to pass, or you vote no if you want to kill it. So it's really counterintuitive. So you always have to be focused on initiatives. You're seeing a lot of information on the initiatives because at this moment in time, I just calculated it this morning, there have been over $500 million in contributions for initiatives alone in the state of California. Over $500 million spent to pass or oppose these initiatives. And one of the most controversial issues affects Prop 13. So most of you who own property know that one of the most important initiatives of all times is in 1978, Howard Jarvis and Paul Gann put before the voters Proposition 13, and it basically says, county by county, city by city, you cannot set property tax rates. The property tax rate in California is 1% of assessed valuation. Your assessed valuation is determined by the year in which you purchase your property, and then it goes up 2% a year every year thereafter. So even though in California, we've had years with 15, 18% appreciation in our property values, we in California didn't have to pay higher property taxes those years other than the 2% increase in the valuation that's automatic in Prop 13. And the other element of Prop 13, which is really critical, all three of these are critical things that really have been able to keep taxes under control in California. Prop 13 requires a 2/3 vote, both at the state level and locally, to impose new taxes. Those are important things. So I want everybody to get this slide. The Prop 13 awareness, your tax rate is 1% of assessed valuation. Assessed valuation is based upon when you bought your property. If it's past 1978, it's the actual price you paid. If it is before that, it is what was the valuation in 1978. And it only goes up 2% a year. Because this year we have two dramatic initiatives that are looking to change Prop 13. Prop 13 was always viewed as the third rail in California politics. Everybody loved Prop 13 so much you can't touch it, you can't amend it, you can't change it, or else people will rebel. And in fact, it was mainly based upon the fact that people have, most people own property, but as fewer and fewer people own property and the value of property ownership is being diminished, that is when the teachers union primarily put forward what's known as the split roll initiative. Proposition 15 basically says all commercial property will be reassessed every year. So right now, that it's only when that property is sold. And in fact, that's when it reestablishes a reassessment basis. This reassesses commercial property in almost every instance on an annualized basis. So if you are a commercial property owner, if the split roll passes, it will dramatically increase your property taxes in the state of California, dramatically. And even the left-leaning state analyst boldly says this will raise $6.5 to $11 billion in additional taxes in the state of California. I mean, it's really amazing. This one action has such a huge effect on tax increases. And let me just make sure you know, when the legislature or others draft these types of measures, they always want to put a cherry on top. They want to put something that they can try to sell to the voters. And in this case, all of this new money will be used for schools. So you will see, how do we get more money into schools? It is, we'll split the roll, make those darn commercial property owners pay more, even in this time of pandemic when all small businesses will probably get a rent increase because their landlords are paying higher taxes. There is this this other strange one that affects Prop 13 that's on the ballot too. And I think this may have a greater effect on some of you. You see, Prop 13 was a constitutional amendment. It was written, and every year there have been modifications to Prop 13. For example, if you have this awesome tax basis on your home, and you say, well, I want to buy another home, but I'm not going to sell this home because I want to keep that low tax basis. Well, there was a constitutional amendment that addressed that. It said if you're over 55 years of age and you want to move to a like valued home, so you might have bought the house for $30,000, now it's worth $600,000. If you sell that, move to another $600,000 home, you get to keep that low tax basis. It moves with you. That initiatives also passed that amended Prop 13 that says if someone inherits that property, they also get that low basis. If your property is destroyed by a flood, you also get that low basis if you rebuild the same value or less to the value of that home. So there have been those kinds of tweaks to Prop 13, but one of those that is really important to one special interest group, the realtors, they think that if people are staying in their homes too long because of they want to retain their Prop 13 benefit. And yes, even though if you're over 55 and you sell your home, you can take that lower basis into a house of equal or lesser value in the same county. So a lot of people in California want to move to a different county. Their kids live in LA County or they live in Santa Barbara or something else. So those people don't get that benefit. So the realtors for a long time have been trying to get a constitutional amendment that moves that benefit outside of the county that you're from, so you can take it wherever you want. So they finally struck a deal in the legislature, and this is how they were able to pay for it. As you can see, this number 1 bullet in 19 expands the current law, which is now restricted to this transfer of this basis only if you buy property within the county in which you're presently residing. Now you can take it to every county. So that means people are going to sell their houses more. They're going to get this savings. There's going to be less money coming into the tax bucket. So how do they pay for that? They basically say those people who inherit a home from a parent or grandparent, unless they live in that home, they cannot accept that lower basis for property tax purposes. So so if your kids inherit your home, unless they physically live there, if they rent it out, they will not receive that lower tax basis, which they do today. So basically, these trade off in terms of cost to the state. So they're close to tax revenue neutral. But wait a minute, where's the cherry on top? And it is in the very last bullet here. He's in the middle of all the wildfires. How do we pay for wildfires? This basically says, oh, and by the way, if we get any excess revenue from this, it'll go for state and local firefighting purposes. So that's why you see the California Firefighters Association and others supporting Prop 19. It's kind of confusing, but it really starts meddling with pieces of Prop 13 and some of the changes that occurred after that. I've kind of lumped the rest of these initiatives into probably 2 or 3 pots. One are new ideas, and there's very few new ideas out there, to be honest, but here's a couple of them. So these are initiatives that voters really have not seen in California before. Prop 17 restores voting rights to felons. Currently in the state constitution, once you're a felon, you do not have the right to vote anymore. This changes it to basically allow for, once you complete your prison term, you will have restored voting rights. Number 2, Prop 18, this is kind of screwy, allows 17-year-olds to vote in primary elections, June elections, or if they're March elections. And basically it says if this 17-year-old is going to be 18 by November, they can vote in June elections in that same year. Why? To probably bring younger people, activate them earlier, motivate them. And as you just saw some of Pat's surveys in terms of where younger in our voting base are voting, this will have a political effect. And that's why in both of these cases, interestingly enough, nobody has contributed any money against either Prop 17 or 18, but the largest contributor for Prop 17 and 18 is the Secretary of State's personal campaign account. So Alex Padilla's account has funded most of those. But there's not much funding going into those two initiatives, unlike Prop 22, which I think everybody has seen a gazillion ads for. So a couple years ago, Lorena Gonzalez, a legislator from San Diego, authored and passed a bill, AB 5, Assembly Bill 5, which basically eliminated the concept of independent contractors in California if you have any affiliation with a business. So it was targeted primarily at a lot of the app-based businesses. So this is a separate piece of legislation, not to a proposition, not to overturn AB 5, because it only talks about app-based delivery businesses. Uber, Lyft, Postmates, and DoorDash, I think, are the primary ones. And more money has been contributed on this initiative than nearly any other initiative except one in the history of California. Right now, the yes side has spent $185 million on getting this passed, which basically says these people who do this service are independent contractors, and there's certain kind of wage requirements for them, but not like if they were an employee of Uber or Lyft. It allows the continuation of an independent contractor status. I just wrote down this morning, DoorDash has contributed $48 million in support of this initiative, Lyft $48 million, Uber 32, Instacart 28. I mean, all the money has come from those guys, but that's what that initiative is all about. And then there's a whole pool of reruns. In past times, these initiatives in some fashion have been on our ballot here in California. I can hit them pretty quickly. The state established a stem cell research program a little over a decade ago. By passage of a bond, and bonds, general obligation bonds, require a vote of the people in California. So now they're back asking for another $5.5 billion in stem cell research bonds. In 1998, I believe, Prop 209 passed, which basically says state government cannot use race, sex, color, ethnicity, or national origin in hiring or admissions. So Prop 16 is put on the ballot to reverse what was passed in 209. If Prop 16 passes, let me make sure I say this, the state can use race, sex, color, ethnicity, or national origin for hiring decisions or admissions decisions to universities and colleges. Prop 20 is one of these really, really tricky ones. Over the last two election cycles, different groups have funded Prop 47 and Prop 57, which have made a lot of crimes in this state much more lenient. For example, it used to be if you stole anything over $250, it would be a grand theft action. Prop 57 in 2016 says no, you can steal something up to $950 and it's just a misdemeanor. There's no jail time or anything. And you can do that every single day and there's not accumulation of those crimes to be multiple petty thefts. No, they're all misdemeanors regardless of how many you have. Many people attribute a lot of the crime activity, for example, in a lot of homeless encampments and others, to the fact you've had early releases and you've really reduced these crime punishments through Prop 47 and 57. So what this does is it reverses a lot of those, particularly on petty thefts and parole. So it does bring back a little more sensitivity or awareness on enforcing those crimes. Prop 20 is supported by law enforcement groups. I just think this is interesting. The law enforcement groups have spent $4.3 million to pass it. There's been $5.8 million spent to oppose it. And the money came from the Zuckerbergs, Facebook family, Studermans, I don't know who they are, that's $2 million from them. And the Quillen family, $2 million from Patricia Quillen, who is the wife of Reed Hastings, who owns Netflix. So $2 million from Netflix, $2 million from the Studerman family, and $1 million from the Zuckerberg family. So that's $5 of the $5.8 million used to oppose this initiative. In other words, to allow these laws to remain lenient. 2 years ago, renters' rights groups put on an initiative to change rent control. Rent control is prohibited in California unless it was established prior to 1996, and local agencies cannot pass new rent control ordinances. Prop 21 would overturn that, allow local governments to pass rent control as they see fit. 2 years ago, the SEIU union, the Service International Employees Union, who has been in a fight with the major companies who do kidney dialysis, they put on an initiative to try to unionize kidney dialysis services. It failed, and again this year they did the same thing. And if you really want to look at how crazy money is, SEIU is spending $6 million, but the kidney dialysis companies have spent $93 million already. It's awfully hard for me to explain Prop 24. It's just a tweaking around California privacy law. Some people hate it because they think the legislature should control this issue, which I do. But other people think that we need to have in statute, initiative, so it cannot be modified by the legislature. And oddly enough, the $5.4 million spent to pass this initiative have all come from one man who has this as a personal priority.
Curt, I just want to give you a heads up. We have 3 minutes left. So
good. I will do it.
Okay.
Quickly, Prop 25 is the cash bail system. The legislature passed a year and a half ago an elimination of the cash bail, so you would not have to pay a cash bail to be released prior to your trial. It was referended, meaning voters have a chance to say, yes, we support getting rid of the cash bail, or no, we want to keep it the way it is. That's what that is. So I will quickly wrap up by talking about the California legislature. There's 40 members of the state Senate, 80 members in the Assembly. This is what it takes to pass legislation: 41 in the Assembly, 21 tax increases and constitutional amendments is a 2/3 vote. Right now, in the good old days, in 1996, the year I was Speaker, we had 41 Republicans, and today there are 18. Actually, that's not true. There's 17 and one independent that caucuses with Republicans. So when you talk about needing 54 votes in the Assembly or 27 votes in the Senate to pass tax increases, the Democrat majority has true control over that. And in fact, the Sacramento Bee suggests that the Democrats could pick up 4 more votes in the state Assembly or the state Senate in this election. So that, Pat, sorry for going long. That's a quick overview of some of the state issues.
Thank you so much, Curt. That's really, really enlightening for all of us. I appreciate
Yeah.
that. Pat, you want to say a couple things to wrap up, and then I'll close us out?
Yeah, great job, Curt. I really appreciate it. It is interesting, the last slide, that virtually the Republicans will have nothing, no one in the Senate, right? They'll have 5 people or something. I mean, the world changes. So I just want to thank all of our speakers today. I really appreciate their participation and all the time and effort they put into preparing their presentations.
And Pat, thank you for organizing this for us. Like I said, it's something that we wanted to do as we headed into the election coming up in a few weeks. Hopefully all of you have a little bit more information, I know I do, to help with the decision on voting. We did record this and the slides are available. I think Brandon, if I can get yours, and then I have everybody else's, and I'll get those out to everybody. I'm not going to put it out on like LinkedIn or YouTube or anything like that. We'll keep it within our group here, just to protect, this is really valuable information here. But feel free within your families and your businesses, if you'd like, right? I'm assuming our speakers are okay with that, to share that internally within your own groups, just to educate them as well. So again, thank you, Curt, Russell, Brandon, Pat, for putting this together for us today for this education. I want to just share for those that are still on, and I see a lot of thank yous popping up. I'm going to click real fast to see, yeah, no questions there, but if you have any questions, certainly we can get them out individually to our panelists. I want to share my screen real fast just to tell you all what's coming up for the Center for Family Business. Most of you have received the emails about the Lemonade Lab that we're partnering with Orange Kiwi and Dr. Ali Taylor. Some of you already attended the first session in September, which was called Charting Your Course. It's a 6-part series. I won't go through it with you now because we're at our mark for ending the meeting today. But I will tell you that if you missed out on the session that we did in September, we're going to be redoing it. This is probably pretty small. If you can't see it, I am going to send it out today. We're going to redo the September one on October 20th if you missed it. And then you can jump right into our cohort, which will have session number 2 on October 22nd. And then we're also doing them around the country. We're in a nice situation with the opportunity to work virtually, that we're now partnering with several family business centers around the country. We're providing content for each other, and this is one of those that Cal State Fullerton's providing for the rest of the country. So you may be in a workshop in the near future with family businesses from literally all over the country and even the world. We have a few from Vietnam that are joining us a lot too. So anyway, so that's about the Lemonade Lab. In November, our workshop will be presented by City National Bank. Joe and I are working on that as we speak, and when we have the details for that, that'll come out to you too. It'll be post-election, so certainly you can guess that there might be, it's not going to be about the election, but you can guess that there will be some election discussion in that meeting. So again, thank you all for participating today and being with us. And again, Pat, Curt, Russell, and Brandon, can't thank you enough for, especially this time of year. I know how busy each of you is at this point, and just take this time to be with us is greatly appreciated. And most importantly, to all of you who took time out of your busy schedules with all that's going on right now too, thank you for joining us. It's an honor to get to work with each of you and serve with each of you. And if you have any questions about anything that we're doing in the center or anything with regards to today's presentation, then please just let me know. Otherwise, if there's nothing else, everybody have a wonderful day, a great week, and may the best man win on November 3rd, whoever you think that is.
Thank you all.
Thanks.
Yeah.
again,
Take
everybody.
care.
Take care.
Bye.
God bless you all.